Are you fine? Hedera coin price prediction. Why Hbar took a slight dip and what it really means. In the ever-turbulent world of cryptocurrency, a single red candle on the chart can make traders panic, influencers start tweeting, and Telegram groups explode with theories. But behind every dip, there's always a story, a chain of market emotions, decisions, and reactions. Today's spotlight falls on Hedera, Hbar, the fast, energy-efficient blockchain network that has been silently powering major tech innovations while most altcoins just make noise. As of today, Hbar's price sits around $0.1757, marking a small drop of about -0.15% over the past 24 hours. A tiny dip, yes, but still a signal worth analyzing. So why did Hedera take this soft fall today? Let's explore the 3 big reasons, with real examples and a deeper look at what's brewing under the market surface. 1. Market correction after a strong rally, the calm after the storm. Every trader knows this rule: when a coin flies too fast, gravity always shows up. Over the past few weeks, Hedera had been on an impressive climb. From 14 cents to nearly 21 cents, the charts looked bright green and hopeful. Social media was buzzing, traders were hyped, and new investors jumped in expecting the next big breakout. But crypto markets are like roller coasters. What goes up often slows down to catch its breath. This week's tiny dip isn't a disaster. It's what market experts call a healthy correction. Think of it like a car after a long race. The engine needs to cool before it can hit full speed again. Let's take a quick example. Earlier this year, Solana (SOL) experienced a similar move. It climbed fast from $120 to $180, then corrected back to $160 before rising again. Traders who panicked during that dip missed the next rally. The same logic applies to Hedera today. Short-term traders who made profits at 20 cents are now taking those profits off the table. That's normal behavior, not weakness. The coin is simply resetting, allowing new investors to enter at a fair price before the next upward leg. Even top analysts like Crypto Tony and Altcoin Sherpa, known for their practical takes, often remind followers. When you see a 5 to 10% dip after a run, it's usually the market refilling the tank, not crashing. So in simple terms, Hedera's current pause is the market's version of a deep breath, not a heart attack. 2. Bitcoin's shadow effect. When the giant sneezes, everyone catches a cold. If Bitcoin were a person, it would be that one big guy at the gym who, when he stops lifting, makes everyone else pause too. Bitcoin's dominance in the crypto market is still above 50%. That means over half of all crypto market value depends on Bitcoin's mood. When BTC stalls or wobbles even slightly, most altcoins, including Hedera, follow. In the past 24 hours, Bitcoin's price has hovered around a tight range, showing hesitation around the $63,000 to $64,000 mark. This indecision creates a wait-and-see effect across the board. Investors start holding back, liquidity slows down, and altcoins lose a bit of momentum. Take Cardano ADA, for instance. Just 2 days ago, ADA saw a similar dip of about 0.2% when Bitcoin paused. Not because of bad fundamentals, but simply because traders shifted attention back to BTC. The same pattern repeats with Hedera, Avalanche, AVAX, and Polygon, Matic. In crypto, Bitcoin is like the weather. When it's sunny, bullish, everyone goes outside to play, altcoins soar. When it's cloudy, neutral, or bearish, people stay inside, trading volumes drop, and coins dip. Right now, Hbar's small drop is part of that wider weather system. It's not isolated weakness. It's the market adjusting its sails to Bitcoin's wind. 3. Investor sentiment and global market uncertainty, fear in small doses. The third and often most subtle reason behind Hedera's dip today is investor sentiment, that invisible force that drives crypto markets more than any chart ever could. Through the Hedera Governing Council, that alone gives it a foundation many altcoins can only dream of. So when you see Hbar drop by a small 0.15%, think of it less as fear and more as opportunity. In crypto, the real winners are the ones who can zoom out and see the forest instead of panicking over a few fallen leaves. Speaking head real-world voices, traders react. Scrolling through X, formerly Twitter, and Reddit today, one can find mixed but interesting reactions. One user wrote, "Hbar dip? Good. Time to stack more before the next wave." Another said, "People panic over 0.1% drops like it's 2018 again. Relax. Bar's building quietly." These small comments show a trend. Most experienced investors aren't worried. They understand this pattern. And that's what separates emotion-driven traders from strategy-driven investors. Compass final thoughts, a temporary pause, not a trend. Today's small decline in Hedera's price doesn't mark the start of a crash. It's the normal rhythm of crypto life. Corrections, Bitcoin's influence, and market sentiment together create these tiny waves in what's still a rising tide. If we zoom out and look at the bigger picture, Hedera remains one of the most promising Layer 1 networks in 2025, fast, scalable, and already used by major real-world applications. So, when you see the next red candle, don't rush to sell. Maybe it's just the market giving you a better entry. In summary, Hedera's drop today came from three key forces: natural correction after a short rally, Bitcoin's hesitation dragging altcoins down slightly, general market caution among investors. None of these change Hedera's long-term story. If anything, they make the next move even more interesting. So, buckle up, because once Bitcoin steadies and sentiment flips bullish again, Hedera might just surprise everyone with a quiet but powerful comeback. Thank you for watching this video. See you in next video. Bye at the next time.